Good afternoon, everyone. A warm welcome to the Digispice Technologies Limited Q3 and 9-month FY23 earnings Zoom seminar. We have with us Mr. Dilip Modi, Chairman, Digispice Technologies, Mr. Sanjeev Kumar, Co-founder, Executive Director and CEO of Spice Money Limited, Mr. Rajneesh Arora, Co-founder and Chief Product and Strategy Officer, Spice Money, Mr. Sunil Kapoor, Full-time Director and CFO, Spice Money. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature. The actual results may vary as they are dependent on several external factors. A statement in this regard has been included in the results presentation sent to you earlier. We will commence the call with the management taking you through the operational and financial performance for the period under review, following which we will have an interactive Q&A session. I would now like to invite Mr. Dilip Modi to commence the presentation. Over to you, Dilip.
Thank you, Shiv. Good afternoon, everyone. Thank you for joining us on the Q3 earnings call. It's a pleasure to reconnect with all of you, and I hope that today's call will help you gain more insight and depth about what we are doing at Digispice, and we get this opportunity to provide any clarifications or answer any questions that you might have. So let me start by sharing with you what all sits in Digispice Technologies. As you're well aware, we report two segment revenues. One is a rural technology segment, and the other is a digital technology segment. As you've been seeing over the quarters, the financial technology segment is actually contributing a significant part to the revenues, consolidated revenues of Digispice. As of this Q3 of this financial year, it's now close to 95% of the consolidated revenues of Digispice accrue from the financial technologies business. And therefore, the digital technologies business, which is the B2B business, has now become closer to 5%. So we have always been talking more around the Spice Money, which is the fintech business of the company, because this is where we see the major growth going forward. As far as the B2B segment is concerned, as you will see in the presentation, we have invested in that business, but this has been a legacy business where we've been working with telcos in the region. This is a business that we've been doing for a long period of time. And as the telcos have migrated to becoming more data and OTT-led businesses, we've been trying to invest in new platforms, but there's been a lag between revenues and costs. And if you see the consolidated financials, while this contributes 5% of the revenues, it still contributes close to 20% of our consolidated costs. So this is a segment that we are going to be looking at the board level, because this is the segment that's actually creating a drag on the profitability of the overall Digispice Technologies consolidated report. So we will come back to you with respect to our strategic view on this segment. But really what we want to focus with you is the main growth engine of Digispice Technologies, which is our rural fintech business, Spice Money. Before I hand over to my colleagues, I'd like to make a couple of points here. As you're aware, the rural ecosystem is a big focus area for both the government as well as public and private sector in terms of driving the GDP growth of our country, both in terms of infrastructure and consumption-led growth. When we are talking about building a $5 trillion economy, almost everyone's talking about the role that rural India will play in this GDP growth objective that we all have as a country. Today, at Spice Money, we've built very clearly one of the largest mobile-based ATM banking networks in deep rural India. You will see the numbers, but it is very clear that we've extended our reach to villages in deep rural. And the platform today, Spice Money, both mobile and web, are used by young digital entrepreneurs living in those villages. So effectively, we are now being used by a lot of young digital entrepreneurs who are effectively driving digitization of rural India. So this is a big trend on the back of which Spice Money is riding. Now, what further excites us is that there is a huge investment that's happening in the digital public goods infrastructure, both in partnership with government as well as public goods being built in a private spirit. Whether we look at ONDC, OKIN, account aggregator, many other industries, we see a lot of work happening on digital public goods. We all know about UPI. UPI has still not reached Bharat. And this is something that we are very excited about. How do we take these open platforms and leverage them to solve for lack of access of services in rural India? You will hear about that in the presentation. Finally, we're very excited because we believe that we have the starting point, where we can solve for many issues, starting with delivery of formal banking and financial services. So one of the things that we've been sharing with you is how we do not want to restrict ourselves to just being an APS-led ATM banking platform in rural India, but move on to a much larger opportunity where we can leverage digital platforms to drive access to financial and digital services in deep rural. We will, in today's presentation, give you an update on where we are in each of those legs on moving to a larger opportunity. And finally, because we are excited about this large opportunity that's opening up in rural India and how tech-led platforms are going to drive growth in rural India, we're going to be investing behind them. So I would encourage all of you to look at us more from the point of view of the investments we are making, which mostly flow through our P&L because it's mainly in manpower and teams. We're going to talk about today a breakup of how our investments are flowing through the P&L. But more importantly, look at us from the lens of how we are driving overall GTV and income and margin growth. We will continue to invest because we believe that there is a window in which we can build large platforms that can drive and solve for the problem of lack of access in rural India for banking and financial services. Very excited about this and would be more than happy to answer any questions that you might have. I'd like to pass on to my colleagues, starting with Rajneesh, who's going to walk you through, specifics around the rural ecosystem and some of the digital public goods infrastructure that's getting built out there. And then we'll go into further details. Over to you, Rajneesh.
Thanks, Dilip. Yeah. Can we blow up the slide, please? Thank you. So, what we are doing currently is, fundamentally, as Spice Money, we are solving the problem of access and currently making financial services accessible to the Indian rural citizens. Some of the highlight numbers, as of now, we have 12 lakh plus adhikaris, these digital young entrepreneurs in rural India who are working on Spice Money platform. We do transactions worth 1,61,000 crores in terms of the GTV. So gross transaction value is 1,61,000 crores on an annualized basis, annualized on the 9 months of the current financial year. And on our e-hook product called APS, we have a leading 17.1% market share, which we have been growing over the last few years. In terms of our coverage, we are present in deep rural. Our focus is, we are a rural fintech and our focus is blocks or small towns and villages. So we are present in almost all the blocks of the country, which is 6,450 blocks or small towns, and 2,26,000 villages out of the total 6 lakh villages in the country. And in terms of PIN codes, we are present in most of the, PIN codes of the country. So this is our current coverage. And we are achieving deep penetration at a village and block level. Next slide, please. So as Dilip spoke about, the critical growth, the key growth in GDP for India to become a 5 trillion economy, everyone is looking at rural, right? So whether it is the government or the private sector, we are all aware that the opportunity really sits in rural. Looking at some numbers, today about 46% of India's national income is coming from rural economy. And over the last almost a decade now, the rural economy growth has been surpassing urban economy growth. So basically, rural has already been driving growth of Indian GDP. And going forward, the contribution of rural economy is only going to grow. rural contributes about 68% of the total workforce of the country. So at about 35 crore people is what rural India employs today. And in terms of internet penetration, again, the entire growth of Indian internet penetration is now coming from rural. The growth rate in the number of subscribers now, internet users in rural are now 20% more than urban India. Also, the key building blocks as infrastructure for rural India, which has enabled, progress in the financial services segment, is the JAM Trinity, Jan Dhan, Aadhaar and Mobile. So Jan Dhan is a bank account, is a basic savings bank account, which is now available to 46 crores, most of them being within semi-urban and rural areas. Aadhaar, almost every citizen of the country has Aadhaar, and most of these Aadhaars is now linked to the bank account. And we now have 75 crore smartphone users in India, and this growth is also being driven in rural. So I think these are the key building blocks, along with the digital public goods infrastructure that Dilip spoke about, and we'll talk about that, which is enabling players like us to build products and services and, enable them to reach every nook and corner of the country. So it's a tech inclusive framework which we are, riding on and, leveraging the rural opportunity. Next, please. So why are we, so our core belief is that, so one is that there is an opportunity in rural India. The other key question to answer is that what is the key to solving that opportunity in rural, right? And our key belief is that because urban and rural are very different markets, not just different in terms of economics, but diverse in terms of the way rural India lives, thinks, shops, everything. The key to solving those problem statements or accessing that opportunity is also different. So let's look at some of the key characteristics which are very different between urban and rural markets. So if you look at merchants, in urban, we find merchants or retailers being very specialized in one category. The moment you go to small towns, it becomes multi-category, and the moment you go rural, I think it's like every rural merchant is doing multiple, it is not just products, but products and services, and not just single service, but multiple services. So a rural merchant is actively looking for more and opportunities to grow his business and serve the customers. In terms of the relationships, specifically between a merchant and a consumer, if you talk about, in urban, these relationships are led by transactions. In rural, these are led by communities. So over the generations, the retailer is in the same community, the customers in the same community. As a result of these relationships, the trust that any brand drives in urban market is largely through advertising. And in rural, it is almost entirely through word of mouth, right? So if somebody has benefited from a particular product or service, that is more likely to make other people, use the same product or service compared to any kind of advertising. So the brand and the trust is largely built by word of mouth. Ticket sizes, we are all aware, because of propensity to pay. There is a demand for larger ticket size. In rural, we've seen in the case of FMCG industry that reducing the ticket sizes or making the product sachet size has led to significant growth. The same is true even for financial services, right? The need, for example, for an insurance product or a savings product or a credit product in rural, in terms of ticket size, is much smaller, and therefore the way this opportunity has to be chased also becomes very different, right? So to make a smaller ticket size viable, the business model has to become very different. As a result of all this, and also, for example, assistance, right? So we do see a majority of the rural population does seek assistance. And this is not just because while there's an element of literacy, which which is now improving at a fast pace. But there is also an element of, because people trust and they consult others, right? So there is an element of influence that people are able to make, within rural markets, compared to urban markets, where largely the decision is, more like do it yourself in terms of the activity, but also the decision making. So as a result of this, what rural needs is a very grounds up approach, and a multi-pronged ground up approach in terms of product, in terms of user experience, and also in terms of a business model, right? So in rural, a community-led business model is far more likely to succeed compared to a direct, a direct business model. And that is what we've seen in case of Spice Money also. Our success has been largely attributed to the local digital entrepreneurs, the youth of rural, enabling digital services for consumers within rural. Yeah. Next slide, please. So again, as Dilip spoke about the various, public good infrastructure that is getting laid in the country. And I think India is one of the unique countries where a large public and open infrastructure is getting created on which, private sector can build products and services. We are very excited about, not only the current stacks that are available, but all the emerging digital stacks that are coming up. So if we talk about ONDC, Open Network for Digital Commerce, ONDC is a great opportunity, enabling democratization of commerce. So no longer will e-commerce be restricted to few large organizations who can invest billions of dollars upfront. By virtue of it being open and by virtue of unbundling the various services, right? So whether it is as a platform, e-commerce had to bring in sellers, buyers, set up the logistic infrastructure themselves, like as one entity. In case of ONDC, they've really unbundled all of these pieces. So somebody could bring in sellers, somebody could bring in buyers, and somebody could play a logistics role. Specifically in context of rural, we see a huge opportunity in creating business models riding on ONDC to leverage the, uncracked e-commerce opportunity within rural. Coming to OCIN, which is Open Credit Enablement Network. So what ONDC is doing in commerce, OCIN is going to do in credit. At a very basic level, it is going to bring borrowers, or loan service providers on one hand and lenders on the other hand, and bringing them on one common API-based platform in order to extend, the credit products, relevant credit products to borrowers. So again, this is early stage in terms of its rollout, but in terms of the design and the thought, we are very excited about the fact that this can do wonders in terms of enabling access of credit to rural citizens and rural businesses. And we want to participate in that. Account aggregator, again, this is going to help leverage power of data. So at a very basic level, based on customer consent, the data that the customer holds in the form of, for example, bank accounts, insurance policies, pension details, etc. All of this is going to become available at a click of button based on user consent, enabling alternate data-based underwriting for the lenders. So again, this along with OCIN will significantly help delivering credit and democratizing credit. And then there are new areas around, for example, creation of Udyam Aadhaar, which significantly, so basically Udyam Aadhaar starts to create a unique identity for MSMEs. So like there is an Aadhaar for citizens, there is an Udyam Aadhaar for MSMEs. And based on that one identity, the ability to, get all the government benefits and all the data related to the MSME. So that's the thought process. There's another digital health ID that is being created for all the Indian citizens. So I think the point is that our intent of using the digital infrastructure to enable all of these services to rural India, all of these infrastructure comes like a core building block. And we are working closely with, with most of these emerging digital stacks to also see that how do they become very, very relevant for rural upfront. Next slide. Yeah, Sanjeev, may I request you to take it forward from here?
Thank you, Rajneesh. Good afternoon, everyone, and thank you so much for joining in. What I'll do is, over the next few slides, I'm going to talk about what our business model is. It might be repetitive for a few who would have attended the previous quarter results. But I would want to continue to talk about it since it just reconfirms that we continue to stand on the operating model that we've been talking about, and we continue to build it. We'll also touch upon the few of the key metrics in our growth on the larger opportunity that we are seeing in rural India. So it's essentially, if I were to marry the last few slides of talking about rural India, talking about the digital stacks that are now built, and how we are now, what we are trying to do is we are trying to democratize those services in rural India using those digital stacks. Eventually, what is it that we are building? We're building a super app for Bharat. What does this mean? It very simply means that if you were to talk of a rural consumer, and I would put down what his use cases, what is his needs. It's about banking, payments, financial services, digital services, a lot of those pieces. These are the services that he needs. And if I can build all of those services onto a platform, and if you can build a network of entrepreneurs at each block and village level, then why does a rural consumer have to step out of the village? Now, something like this, in my opinion, was not possible earlier, and the reason was technology. Today, given the digital stacks and technology today, this is a possibility. So in this slide, if you notice, 5 of these boxes, 5 of these big services are already live. The latest one is the government services, G2C service on Umang, which is gone live last quarter. The remaining 4 are work in progress at different stages. And over the next few quarters, we will have them also live, which does complete this pie of offering all of the services to rural consumers. Next slide, please. I'm extending that slide of saying we're building a super app for Bharat. What does it mean? It means that there is this entrepreneur in rural India whom we call Spice Money Adhikari. He's a merchant. He is now digitally onboarded with us. He's using our app. And through that app, he's providing services to consumers who walk up to him to avail those services. For example, there's a customer who wants to withdraw money. He does not have to go to a bank branch, which is about 25 kilometers from his village. He comes to the Spice Money Adhikari at his village, does his biometric authentication, gives another mobile number, and withdraws money. He wants to buy a ticket, he does that. He wants to transfer money, he wants to pay bills. He wants to even do, pay for his EMIs. All of the services that I mentioned in the last slide now is available at the doorstep at a village. So on one side, we are marrying suppliers, product manufacturers, service partners, and in the middle is the Spice Money entrepreneur. And on the right side is these consumers who are walking up to him to avail these services. Now, if you look at it at core, what makes this model unique, it is a win-win for everyone. For the product manufacturers and service partners, who could not access rural India all this while, now there's an opportunity for them to access at a very, very reduced cost. In the center is the Spice Money entrepreneur who now has found a new source of earning. And like we spoke about, 70% of our network is below the age of 30, which is the youth of rural India who's adopting this faster than others. Right? Hence this entrepreneurship that is being created in rural India. And third is for rural consumers who now do not have to walk 25 kilometers away from the village. They get the access of all of these services at the doorstep, at the village, through assistance. Next slide, please. We had spoken about it last time. I want to give an update on this. If we continue to the basic problem statement of solving for access in rural India, like I said last time, while we started with building the largest ATM banking network, we are moving to a larger opportunity. That is not the only opportunity that we were keen on. We want to build a larger opportunity in rural India, and I want to give an update on this today. The first of the journey that we had said was we built the largest ATM banking network. Today we are a network covering 2.26 lakh villages, and we are a leader in the offers APS market share of over 17%. The second business line that we moved on some time back now, this has been about six quarters now, is to build a deep cash collection network. Today we've onboarded over 60 plus rural focused enterprises, primarily MFIs, and we're also doing bill collection for over 100 billers because we're also a BBPS license holder. The third business line over this is building a largest banking and financial services platform. We've been doing some pilot on using data and on transaction data on our platform to provide alternate underwriting and using that to do lending for our Adhikari network. Moving beyond financial services onto digital services, we're doing a pilot with ONDC on the ONDC network, and the idea is, can we build a platform to enable e-commerce in rural India? Now this will be in two dimensions. One will be for the merchants, so Adhikari as a merchant who can buy goods and services that he needs today to sell, and second, he can also do assisted commerce for the consumers in rural India. Apart from that, we've also partnered with Umang towards delivering government services to rural citizens. This is the service that went live in the last quarter. And eventually, we also believe that even the consumers in rural will go digital faster. By when is a matter of anyone's guess, but there is this youth of rural who is adopting digital faster, and for that segment, we're also building first of its kind rural focused for the youth a digital payments app. This is a larger opportunity. It's very important for us to visualize that Spice Money is just not an ATM banking network. It started with an ATM banking network. It built the largest ATM banking network. It started to leverage other business lines and products and services. Very adjacent was the cash collection. We've had some good success in it. We continue to build that. And now we're building a banking and financial services business model over that. And then apart from that, there's digital services and then also a digital consumer offering for the rural youth. Next slide. Next slide, please. Few of the key operating metrics. Firstly, we are, like we said before, we are 12 lakh Spice Money Adhikari, over 2.26 lakh villages, a 33% growth over last year. Our gross transaction value is about 24,000 crore. Again, a 13% growth over last year and a 2% growth over last quarter. Service fee revenue at 99 crore this quarter, 10% of growth over last year, 1% over last quarter. APS market share, we are over 17% now. We were 16.4 ending March 2022. Next slide, please. On few of the services, APS, which has been our flagship product, we've grown at 12% vis-a-vis last year, but has been pretty flat in terms of quarter-on-quarter growth. This is primarily, and I'd spoken about it in last quarter results also. This is primarily because in the last 3 quarters, the offers APS market has not grown. it is pretty much static or actually degrown a bit, but we continue to hold our market share, and hence our business, the quantum of business has been at the same level as last quarter. MATM has also seen a bit of decline than last year. This has been primarily basis few of the restrictions that few of the banks have put. There's no alarming reason here. I think these are pretty much genuine practices being done by banks to prevent any kind of misuse on the cards. And I think that will be a regular practice. However, we definitely see we'll continue to build this business as MATM and both APS as two devices, biometric and the card device, continue to help the cash out business opportunity. Bill payment, which is BBPS, again, it's a very, very interesting opportunity for us. It's been going very well. So you will, in this part, the EMI section is what I want to call out here for a minute, which is what is we're seeing significant growth. 31 crore business of Q3 last year, sorry, FY22 is now 391 crore, been a significant growth. Even from a quarter-to-quarter basis, there has been significant growth in EMI collection and overall bill payment. I'm particularly calling out EMI collection because this is something we've noticed as a very, very important use cases, and it's working very well in rural India. And we continue to see a super success on our network in this business, and we will continue to build this. Third, next slide, please. Sorry. CMS this is again cash collection network. Again, a business that we've seen very, very promising growth. This was a business that actually started last year, scaled pretty well, and this year again we continue to build this business. Vis-a-vis last year, we're seeing a 40% growth on a quarter basis. From quarter FY20. On a YOY basis, 40% growth, and a 9% on a quarter growth. Recharge again has been pretty static. Has not seen any incremental growth this quarter. Don't see any other reason for it. I think it's just a cyclical business. There are cycles we've seen this business go down and come back again on a quarterly basis. Nothing alarming here. Travel is another business we've grown last year. We've done some. We see some promising business opportunity going forward. Again, we'll see on this. We've seen some cycles of this business, but we are seeing this business coming back, and I'm very confident that this business is going to grow again. Next slide. Yeah, I'm going to request Sunil now to take us through the financial highlights. Sunil, over to you, please. Sunil, you're on mute.
Thanks, Sanjeev. Good evening, all. Okay, this slide contains the Spice Money financial highlights, and first I'm covering with respect to the Q3 financials, last quarters, which is the customer GTV for the Q3 has grown by 2% from 24,421 crores to 24,913 crores. And revenue, the service fee revenue, which we are focusing, has grown by 1%, and thus the gross margin has improved by 4%, which is service GM to service fee revenue, which has improved from 35% to 36% in this quarter. And if we see that indirect cost is kind of static, the same the last quarter, and thus the EBITDA from negative 50 lakhs to positive 60 lakhs. If I cover that 9 months progress, that's 9 months in this financial year versus the last financial year. We have grown in customer GTV by 27%, and in line with that, service fee revenue has grown by 25%. And gross margin is a better gross margin growth with 38%. And indirect cost, if we see that what we have invested in last 9 months, that's almost 48 crores increase in the indirect cost, which is 71% over the last 9 months of the previous financial year. I will take you through that those indirect costs where we have kind of invested in the business and segments or the functions. Can we move to the next slide, please? So here is the 9 months this financial year versus the last financial year 9 months. We have almost invested 48 crores in this indirect cost, which consists of primarily 81% coming invested in employees and related cost, and rest 19% is in call center and technology and infra cost, and marketing and promotions and other admin. So primarily that's 48 crores. 39 crores has gone into the employees and related cost, which is on the right hand side of the this PPT, the pie chart, where we can see that this 39 crores have been invested into. Basically 93% of this 39 crores have been invested into sales and distribution, product and technology, and leadership team to strengthen these functions and activities to take on other opportunities or other activities which we have planned for the futures. So this is an investment goes into these areas to give an idea about where we are investing to strengthen the company as a whole. So that's it about this PPT. Can we move to the next slide, please? This slide contains the consolidated financial summary, which contains the fintech segment, which is a Spice Money, which I have covered in the previous slide, and the other segments primarily consist of Digispice platform business. So if we see that Q3 financial year, that's the revenue and gross margin is pretty flat, and indirect cost has moved up a little bit due to some forex losses and forex translation reserve. That has created this 3 crores indirect cost primarily. So we are at EBITDA level, we are negative for 8 crores. From previous quarter, it was 6 crores. And in 9 months, if we see, there's a swing of 13 crores negative from a positive one. But that's we have explained for the fintech segment that there is a we have invested in the indirect cost with respect to the strengthening of the leadership team and sales and distribution. That's the reason of it. The impact of these investment may be in the coming future. And other segment as Dilip sir has mentioned in his opening remarks that we are figuring out how to kind of take a strategic call on this segment. And Spice Money revenue, we have kind of contributing for overall basis 94% in this quarter. So that's all from my side. Thanks. And back to Shiv.
Thanks, Sunil. That brings us to the close of the Digispice management's opening comments. We will now start the Q&A session. Please use this opportunity to interact with the management team Please raise your virtual hand and state your full name and the organization that you represent before asking your questions. In addition to questions on this call, we will also accept questions in the chat box available to all participants. Now we'll start the Q&A session. Anyone who wants to ask questions, Navdeep Mehta could ask your question, please.
Yeah. Good evening, all of you. Actually, I'm an individual investor and I am holding Digispice shares from last 3-4 years, and I'm reviewing financial results every quarter. So my question is, digital revenue is going down quarter on quarter, and what is happening on Corero front?
Navdeep, hi. Can you hear me?
Yeah, I can hear you, Dilip.
Yes. So, Navdeep, yes. So last 2 years, Navdeep, ever since COVID happened March 20, historically, Navdeep, at Digispice, we've had the enterprise SMS business where we've been working with large enterprises to deliver SMS-based services, which has been a business that we've been doing for 10 years. And we had large banks, in fact, the largest bank of India also, as customers that we were working with. When we saw that what is the opportunity, Navdeep, to convert this into a new business opportunity, we came across this opportunity to convert it into a communication platform as a service business, and that's when we imagined about Corero. But what we've seen, Navdeep, as we've tried to reach out, so we invested 1.5 years in terms of building out and building other channels, whether it was voice, WhatsApp, and other channel integrated into the platform. One assumption was that, we'll be able to penetrate a lot of customers using a multi-channel strategy, not just SMS, but multi-channel. And that's what we branded as Corero, Navdeep. What we are seeing in a B2B sales cycle, however, that, especially during COVID, a lot of customers, large customers, they, fell in 2 categories. One was the RFP business and the non-RFP business. And the RFP business, a lot of the large telcos themselves jumped into the business and really quoted very aggressive pricing, which was just economically unattractive for, non-telco players. So because of that, it became very difficult to compete on the RFP side. And we had a lot of RFP business sitting there, which we were trying to move to Corero. And on the private side, Navdeep, we've been working to invest in sales organization, in product build out and all that. And we've seen a very hyper competitive environment there. So while we continue to, drive it and teams are vested in it, like I said, nearly 20% of our consolidated costs at Digispice continue to be in the B2B segment, while it only contributes 5% of the revenues. I'm finding that, there is a big lag between costs and revenues. And that is what now we are very closely, observing at the board level in terms of looking at the funnel of business we are getting for Corero and really seeing the investments that we'll need and what is the viability, of building out a profitable business in the short term, Navdeep. So to that extent, we will be looking at options. It is having a lag on our P&L in the short term, but we continue to engage with both our existing customers and new customers. But Navdeep, this is taking time, and that's why I mentioned upfront that we're going to be evaluating what are our options, because we do not want the P&L to drag because of this delay in revenues linked to costs and investments. So I'm going to come back and talk to you further about this in the coming quarters. Hello, Navdeep, are you there?
I think you already answered this question. So okay. I think the next question is from Praveen Sharma.
Yeah. Hello. Am I audible? Hello.
Yes, you are.
Yes.
Please.
Yeah. Okay. So I'm Praveen Sharma and I'm from Sharma Wealth Advisors. So I just had 2 questions. I just wanted to understand what is the typical customer transaction cycle with an Adhikari? How long does it take to execute the transaction, and by when does the Adhikari receive the payout? So that is question 1. The second question that I had is the indirect costs have been rising every quarter. So could you probably elaborate where are these investments being made and when are we expecting to see the operating leverages in this business? Thank you. That is it from my side.
Rajnish, you want to take the first part and maybe Sunil could do this?
Sure. So I think in terms of the the time it takes for the customer to transact at the Adhikari point. So I think the biggest time that it takes is for APS, where the customer has to give his Aadhaar number, give his bank name, and then, authenticate, put a fingerprint. But that takes like under 1 minute. Okay. And most of the other transactions are pretty much talking about the total time, right? The actual transaction time on the system everything is in like milliseconds. Okay. And for APS at best at 1 or 2 seconds. So that's the time it takes. It's not it's not an area of concern or worry, and we've been able to, kind of minimize, build the user journey in a manner in which it kind of minimizes the entire time it takes for the transaction to complete. Sorry, what was the other part of the same question you had around customer transaction?
Yeah. How much time does it take for the Adhikari to get his money?
Okay, so the commissions to the Adhikari, in most of the products, we pay instant commission to the Adhikari. So the moment the transaction is through, the commission is credited to his wallet.
Okay.
Yeah. So, Sunil, you want to pick up on the indirect costs and the operating?
Yeah. So as I mentioned in the presentation also, that's in the last 9 months, kind of we have invested 48 crores worth of for strengthening the organization at different levels, which will yield in the coming future. Having said that, we will continue to invest further where we have kind of identified the opportunities that as you have seen on the that super app, that's the wheel we have shown. So we will continue to be invest on that. But having said that, whatever invested, that will be start yielding in the coming quarters. But investment will continue to till what we have envisaged for in next 2 to 3 years.
Okay, that answers my question. Thank you so much.
The next question is from the chat box. Rishu Dhawan. What is the breakup of depreciation, which is legacy system versus Spice? It's around 6 crores in the latest P&L statement. Do we see the depreciation continue to grow at the same pace as we continue to invest in technology, or do we have any specific asset or amount that needs to be depreciated overall?
So we can kind of because we invest in the devices to be placed with the Adhikaris. So that's we are capitalizing kind of for a period of 1 year. Due to that's depreciation is you are foreseeing on the higher side. But having said that, this will not be at to the tune at or to the level at which we are as of now. So in the coming quarters, it will be lesser depreciation for the financials quarter on quarter.
Okay. Rishu, does that answer your question? You're on the chat, so I think I'll just wait for your response. In the meanwhile, we'll go to Saurabh Gupta. Next question from Saurabh Gupta. Please ask a question. Thanks. Unmute yourself. Thanks.
Yeah, hi. Thank you for the opportunity. Am I audible?
Yes, sir.
Yes. So I have one question with regards to the industry. So AEPS industry has been quite stagnant in the past few quarters, and companies like Fino Payments has already reported a slow growth from this segment. And in our case, the reported numbers show a similar trend. So is this expected to continue for the next financial year as well?
Sanjeev, you want to just pick that?
Sure. So Saurabh, I don't think it'll be fair for me to predict if it is going to continue. I don't think there are any signs like this. But yes, for the last 2 quarters, it's been static and degrowth from the first quarter of this year. But very difficult to say right now, Saurabh. I don't think historically and as per all other reports that we have, we believe that this business should grow and will grow. I don't want to comment on what percentage of growth we will see, but directionally, this is a business that should continue to grow over the next few years.
Yeah.
Can I add here, Sanjeev?
Yes, Rajesh, please.
So AEPS today, the numbers that you say is coming out of cash withdrawal product, but AEPS as a platform also enables cash deposit. This is something which the product is ready, but is yet to be rolled out in terms of all the banks, right? So the banks of the customer still have to kind of roll it out. That part, I mean, the cash deposit as part of AEPS we see as a huge opportunity which can take, which can grow the AEPS industry significantly. Just that, whenever such things go live, they generally do take a bit more time than anticipated because a number of banks, like 100+ banks, have to go live on that. But in the next few quarters, we do expect that to start playing a role in the growth of AEPS industry.
Right. Rajneesh, thanks. I will take a follow-up question from Rishu Dhawan. Maybe there was some questions there. Rishu Dhawan, please ask a question.
Right. Thank you. Yeah. So my question is more around the road to profitability as a Digispice. Yes, like Mr. Modi said in the beginning, that partially we can address it maybe by hiving off or restructuring whatever the legacy Digispice business. But even at the Spice Money level, if I see the latest P&L statement, we are in red where when I see the segment-wise result, Digispice, the Spice Money is not at the break-even level. It's still in the red. So what is our plan in terms of road to profitability? That okay, the EPS overall is kind of stagnating from the last couple of quarters. Yes, like Sanjeev said, maybe over a couple of years it will continue to grow. However, do we have a plan in place to move towards generating profits overall? Because see, I'll be honest, yes, fairly good metrics, like the management is saying that the GTV is increasing, the adhikaris are increasing, the other metrics which are as a part of the management fees and values the company, they are performing well. But however, if I see it from the investor's perspective, my key metrics is, are we generating profits? Are we EPS positive? What is the PE multiple? What is the cash flow? So from that perspective, I don't see things are improving. I'm an individual investor and have been into this company for more than a year now, looking at the promising industry or the fintech. But I want to hear from you, Mr. Modi, what is our plan in terms of what will drive profits ultimately, and when do we see the profits generating?
Yeah. No, thank you, Rishu. I was very keen to come in and answer your question. First of all, thank you for believing in us and being a shareholder for the last 1 year. I would say, Rishu, what's happening in rural India with the penetration of smartphone, internet, and all these open stacks, Rishu, we are at the brink of something really big that's going to happen in rural India, Rishu. If you looked at some time back, in urban India, and we spoke about, if I take it long back, right, about growth of e-commerce, growth of UPI, we couldn't have imagined, right, that how many consumers would be ordering online, or how many consumers would be, instantly paying money using mobile phones, right? I think rural India is going to go through a similar revolution. So Rishu, that's what excites us, because what is happening today is where roads have not reached, mobile phones and smartphones have reached. And now with all these open stacks, there's an opportunity. So all the players want to access rural India. The problem has been that of economic viability, right? How do you access rural India? What we've managed to do with AEPS is a hook product, Rishu, because when the government came into power 2014, they decided to open bank account for every citizen of India. So 40 crore Jan Dhan accounts opened up, right? But there wasn't that last mile banking infrastructure. What AEPS has done is created a hook for a small merchant and an entrepreneur in a deep village in rural India to onboard themselves and start offering a basic product of giving people access to their own money. And that is why we've seen the APS industry really grow over the last several years. And there's going to be lots more products coming on it, like Rashid said, cash deposit, right? So Rishu, what's going to happen is that right now, if you look at our APS numbers, it's just around cash withdrawal. But the same network is going to double up to, enable cash deposit. So when we talk about operating leverage, the same infrastructure, the same adhikari, the same app, the same support system, right? And the consumers are now going to be able to do cash deposit as well as cash withdrawal. So what we've been doing over the last 3 years, especially Rishu, is we've been focusing on layering more and more use cases. Collections, it's a big use case, right? The same adhikari now in the village itself can serve as a collection point for both the agent of the MFI as well as the end customer, who's a borrower of an MFI coming and depositing cash. And this has huge economic benefits for the enterprise. And therefore, there's an opportunity to share in that value chain for us as a platform. And then, when we get into full banking and financial services, right, whether it's account opening, whether it's credit, whether it's insurance. So Rishu, this is a journey. And, we have two options. One option is, we stay as an ATM network, right? We do not invest in infrastructure on the ground, technology capability, data mining, data science, product management, leadership, right? Which can enable us to build new centers of excellence, right? Around collections, around banking, around financial services, around insurance, around commerce, right? We can just stay where we are, which is just an ATM banking network, and deliver on, profitable growth, right? But like you yourself, or the earlier speaker said, that we've seen a slowdown on the APS cash withdrawal, right? We think cash deposit will come and make up for that, right? But what's the larger opportunity? The larger opportunity is that if we invest in the infrastructure on the ground, right? After some point of time, the number of things we can do using both the people and the technology infrastructure, the impact of that will flow to the bottom line, right? But that's going to need that focus and investment in infrastructure over the next 2 to 3 years, right? Because having gotten there early, it'll be really, a missed opportunity if we don't consolidate our position in the market. And if we can consolidate tomorrow, whether it is UPI for Bharat, whether it's commerce for Bharat, whether many other things for Bharat, we have the early mover advantage to ride on that issue. So I can only say this, that as a promoter, as an investor myself, I'm taking a long-term view on this business, because I do believe, that businesses like this need a longer-term perspective. If you see the way we have been investing in this business, Rishu, it's all bootstrap, right? It's all money is being generated. We are cash flow positive, right? So all money is being generated from within the business are getting reinvested in the business. We're not raising equity or debt. We are a zero debt company, right? So we are not going down that path of raising crazy capital and just, investing it, to acquire consumers. We are really trying to build through viable business models, but there will be a lag between investment and return. We do want to invest in a very, bank grade, compliant infrastructure. That will require investment. That will require people on the ground, right? And we want to make those investments because then large banks, large NBFCs will trust us with their products on the ground issue. So, it really depends on the lens you're wearing. Is it a short, mid, long-term lens? But I do believe that we have an opportunity to really build long-term value here, Rishu. And that's the lens through which we at the board and at the management level are looking at this business. Are you there? Sorry, Rishu?
Yes, I think there's one more question from Rishu, but I'll take that subsequent to some more people who are there in the queue. From Navdeep Mehta. Is there any plan to start lending business, or will you continue as an aggregator? Is there any plan to demerge Spice Money business anytime? Any fundraising plans? I think you already answered that, but the other questions, would you like to start the lending business, or will you continue as an aggregator? And is there any plan to demerge Spice Money anytime soon?
So I think on the lending business, in the update we have shared that we've already started with doing alternate database underwriting to our own adhikaris. So they are the first point of call for us to participate in the lending value chain, and this is like end-to-end digital from origination to underwriting to collections. So to that extent, we are participating in the lending value chain. Whether we would end up, moving into, our own balance sheet based lending and all that, Navdeep, is that what you're seeking, in terms of a question? I think it's a journey, right? I think all I can say is that we are closest to the consumers in rural, and therefore we want to solve for that problem, in terms of, putting risk capital to work, right? But are we there yet? No, right? Will we get there? I think, we will attempt to get there, because there is a problem of capital in rural. People are looking for credit. People are looking for formal capital. People are looking for reduced cost of interest. Can we solve it using digital? We truly believe we can. So we've started with the adhikaris. We want to lend to them. We want to enable them. We want to learn through that. And then from there, how do we go to Grahak and how do we move towards balance sheet? That's a journey we will go. Is there any plan to demerge Spice Money business? No, there's no formal plan as of now that we've considered at the board. If you see, Spice Money now predominantly contributes the significant part of Digispice business. In fact, de facto, I would say that Spice Money and Digispice are very closely now, mapping each other in terms of Spice Money numbers and consolidated numbers. We have to take a view on the other segment business, and believe me, we'll take this view earlier than later. Any fundraising plans for Spice Money? Guys, as we are all firm believers that internal accruals are the best way to raise, to invest. We have been generating capital and we've been reinvesting that money. Will we raise funds? Yes. As we roll out these experiments and these pilots, and we realize that there is a need for us to require significant capital upfront, to chase some of these opportunities that we've piloted and we found a product market fit, we may consider coming back and looking at fundraising options. But right now we are working with our own capital to do these pilots to figure out, which ones to chase from a scale point of view, and therefore what kind of capital we need to provide for it to be able to get the best output from what we are chasing. Yeah. I hope, Navdeep, that answers your question. Otherwise, we can further clarify.
Yes. Thanks, Dilip. Next question on the chat box once again, Saurabh Gupta. The growth in adhikaris has been flat for this quarter. What number are we expecting to close this quarter?
Saurabh, Sanjeev, you want to talk about that? I don't think we don't give guidance on closure, but Sanjeev, you want to talk about the growth last quarter?
I think the point is, I don't want to get into a number, but I think directionally the point is the network has grown to a size which is significantly large. And I think now the opportunity is, can we go deeper and in a designed format rather than just spreading a number? I think that is the way we are taking. In terms of, let's say, village coverage, we are at 2.26 lakh villages. Can we make this more? Answer is yes. And I think that is the way we'll approach. Rather than taking a numeric goal, I think the way we are progressing is a far more in a design-led format of growing this network.
Right. Okay, thanks, Sanjeev. The next question is from Rishu Dhawan. Follow-up question. What are the margins in CMS and EMI collections?
Rajneesh?
So I think in terms of the percentage on GTV or the BIPs, I think CMS business is more around, around 8 to 10 BIPs. And the BBPS loan repayment business is more around 10 to 13 BIPs. So that's the range.
You're on mute, Shiv.
The next question is from Aniket Redkar. Aniket, please introduce yourself and ask your question. Thanks. Aniket seems to be passive. Hina Parekh.
Good evening, everyone.
Aniket, yes, please.
Hello.
Yes, please. Ask a question. Thanks.
So I have two questions based on the ONDC. So currently, what is the status of the ONDC platform? So I think it was expected to launch in the January. So is it live right now? And if yes, then what is the feedback from the users?
Sanjeev?
Yeah, I'll answer that. So Aniket, ONDC is live. ONDC is live. Obviously, it is going through it's a phase-wise launch plan and in a city-wise manner. We are live as a buyer app on ONDC. We started with Bangalore. I think there is some business that we've done there. We want to extend this to a larger network depending on how the sellers will get onboarded. But this is, we're very excited about the opportunity. Like we spoke about, it's a very, very important, stack and network for enabling local commerce, local merchants in rural India, come on a platform, on a digital platform to buy and sell goods to a larger, this, and hence I think, and that is something we're very excited about. So we're watching this space. We're working very closely with the ONDC, and we'll continue to build this.
And sir, how will the business model for ONDC work? And what will be the revenue that we can expect from this ONDC?
So ONDC is a gateway. I don't think, so I think this, let's clarify. ONDC is just what it does is it is unbundled e-commerce and is providing a gateway. The role that we are choosing to play is both as a buyer app and a seller app. And again, it's very early days right now. We are piloting few of these opportunities that we are seeing. The revenue share, however, is about the way we are doing today in Spice Money. It is transaction based, right? So every good that will get sold will have a transaction income of a percentage of that is what we will earn.
Okay, sir. This is from my side. Thank you. Thank you so much.
Thank you, Aniket.
Shiv, you're on mute.
Yeah, you're mute. Sorry about that. I think all the questions are done. I think we're done with the call for today. And Dilip, over to you for closing remarks.
I just see a hand raised from Hina.
Yes, there is one. There's a hand raised. Hina Parekh. Hina, please ask your question.
Hello.
Yes.
Yes, so I had a few questions. So I wanted to know what is the status on the other services that we are planning to launch, like insurance, e-commerce, or any other. And by when are we planning to go fully live with all the services, and what kind of traction are we expecting to see from these services?
So, Hina, maybe I can give it a shot, and Sanjeev, you can add to it. Basically, Hina, each of those services, Hina, that you mentioned, commerce, insurance, and all, Hina, are industries in themselves. And what we need to do is we want to make sure that we are able to get the right product market fit. Like we showed in our presentation in rural India, whether it's assisted led, the sachet of the products, the nature of the product, the simplicity with which we are able to enable the consumers. There's a reason why there's an under-penetration of these products in rural India. And so we have to solve for multiple things before we are able to see scale in each area. So, Hina, I would say that, it's a journey. But what's exciting is that, when we are onboarding digital entrepreneurs, we can train them and they can self-train themselves to be able to deliver multiple services using our platform. And so to that extent, in this journey, we have to go step by step. So the approach we are taking is for each set of services to figure out right partners, do a pilot, do a proof of concept, get the product market fit right, get the economic model in place, and then figure out the way to scale. Right? So I think, that's the roadmap we are on. And that's why we quarter on quarter are providing an update in terms of, any new services. When we started like 8 quarters back, providing an update, we used to talk about 2 services. Now we're talking in detail about 6 services as well as 3 more going in pilot phase. So every quarter we kind of giving an update, Hina, in terms of how we are progressing. So, something like bill collections. We showed the numbers, right? Q2 last year, we did a GTV of about 31 crores, right? Q3 this year, it's 391 crores, right? Just on bill collection on BBPS. So, this is a product we've been working on for some time, and now we are seeing the takeoff in terms of returns. So I guess each segment is going through its own journey. And as we understand as to, what's the relevant product, what's the business model, and we've tested it out in a particular market, we can start reporting numbers around it, So we are kind of, building and imagining or reimagining those products in a rural context and then working with partners to build for that. Sanjeev, you want to just add to it?
No, Dilip, I think you covered it. So I think our intent is obviously, it's not about just getting a product on the platform, but it's important to marry the demand and the supply. And I think That is a very, very big task in rural India. It's not been done before. I think that's an opportunity. So we're trying to pick up product by product, go deep into it. Not only the product, the user journey, but also the go-to-market operating plan, and then we scale that up. So all the product that you said, yes, they will come on a platform, but they will come in a far more, let's say, in a sequence manner with a robust operating model.
Right. Thanks, Sanjeev. I think we are done. I think, Hina, do you have any further questions?
Yes, I just had one more question. So, can you please throw some light on what is driving the bill payment GTV? As we can see a huge jump in that segment on Q-on-Q and YOY basis.
Rajneesh, you want to take that?
So, Hina, the within bill payment, the key category that is, that is growing is the loan repayment category. Okay. So, the reason it has been growing now is because the billers, which means the lenders, have come on the BBPS platform. So this category was opened, I think, about a year or two back, and then the billers started to come on the platform. The key use case is, so if you look at, a lender so most of the repayments by the lender today happen on a, debit to a bank account. Okay. Take any bank or any NBFC. They'll typically do a monthly EMI tip from your bank account. But there is a big bounce rate in many of the lending categories, right? So by bounce, I mean that on the day of EMI, so about 10, 15, 20% of the payments will fail, right? Because there's insufficient balance or whatever reasons. Now, that is the payment which is a problem then for the borrower as well as the lender in terms of how to pay, right? So how do you reach out to the customer? How do you pay? By those coming onto the BBPS platform, it has become very easy for users to now pay. So you can walk across to any outlet because BBPS is an interoperable platform. And if the biller is live on BBPS, you can walk across to a nearest Spice Money outlet and pay the bill. So that is like in cases of other products, it is offering that convenience to the person to be able to, do a transaction at a nearby Spice Money outlet. Okay. In case of microfinance, where most of the collections actually happens largely in cash, and it happens through a collection officer on a weekly or a fortnightly basis, going to the village, conducting a collection meeting, getting all the group members, 5 or 6 members together, and then collecting the cash, and then then going back to the branch, etc., right, and depositing. The microfinance companies are trying to find a way where this whole process becomes comparatively lighter, which means that because the collection is in cash, why does the collection officer need to go every time for the collection meeting and, just to collect cash, right? So one option is, of course, why don't we make it completely digital, where all of these digital apps come into play? But there is a reason, there is a customer segment why this continues to be cash despite digital tools being available. So the opportunity there is that the customer now, instead of waiting for the collection officer to come and collect the cash from each of these individuals, they can deposit within their village at the nearest Adhikari, right? So it cuts down on this whole effort of the collection officer going and having to do it, right? So that is the value add that the convenience that this product brings, and that is the reason we are seeing this growth. Right? It is solving a problem for a microfinance industry and the borrower. Does that answer?
Yeah, thanks, Rajneesh. I think Hina seems to be off now, so I think you answered the question. And we'll close the discussion today. I think Dilip, over to you for any closing comments that you may have.
Thank you, Shiv. Let me, on behalf of the Digispice family, thank all the people who took time out to dial in and listen to this conversation and ask their questions and give us an opportunity to being heard. I think if I just pick up the overall theme, how are we going to get a roadmap to profitable revenue growth? I think that's like a common theme that I hear across most of these calls. And as investors, that's an important theme and a central theme to what we are building. But let me just assure you all that we are building a business which is going to be strong on fundamentals. Though we are a tech business, money matters to us, in terms of, delivering profitable growth. But the kind of opportunity we are seeing in rural today is huge. And we see this truly as a tech-led opportunity. And we can participate in so many industry value chains and capture a significant part of so many industries in terms of value chain when it comes to embedded financial solutions that, we do not want to shortchange ourselves in terms of chasing that opportunity. So if you look at our roadmap to profitable growth, I'll just make 3 points. First is that when we look at our segments, we are focusing on building out Spice Money, which is our fintech platform business. The rest of the business is just 5% of our revenues, but still contributing 20% of our indirect costs. So we're going to take a view on that business. So that's the first. The second point I would make is if you look at our growth and gross margin, as far as the Spice Money business is concerned, 9 months to 9 months this year, we've actually grown 41%. So effectively, our gross margins have been growing, right? And we'll continue to figure out products, right, to drive that. Now, the only reason why you're not seeing operating leverage yet is because we are investing in the organization. And most of that investment, 81%, as we shared with you, is going in terms of people infrastructure and tech infrastructure. And we truly believe that we are doing it because we see green shoots where we can build on long-term growth. Now we'll make some mistakes as we go along, but this is the rule of the game, right? We have to experiment. We have to try out things. Some things will work, some things will not, but we will really shortchange ourselves if we don't go for it. And we're going to make sure that we make every rupee stretch. We're going to be focusing on cost efficiency along the way, but our main focus is growth, because in growth lie answers across the board. So as investors, analysts, and the larger financial ecosystem, I would just urge you to look at us as a long-term play for rural India. If you believe in rural, if you believe in growth in digital in rural, I'm sure you will believe in us at Digispice. Thank you so much for taking out the time. I'd like to thank my colleagues who joined me on this call to answer questions. Thank you, Shiv, for helping us set up this call and coordinate everything. Please stay connected, tuned in. We are all reachable. We are call away. Please do call us at any time. And we're more than happy to get ideas, suggestions, clarifications. We're on this journey together. Thank you so much.
Thanks, Dilip. That brings us to the end of the Q3 earnings call of Digispice Technologies. You may all disconnect from this call. Thank you.